Hi friends, today I will be talking about accounting for hire purchase transaction. Well, today's session goes like this. I have prepared the agenda for the session, that is, first is introduction, then I will be talking about the hire purchase transaction, then I will be talking about the terms to be used in hire purchase transaction, then I will be talking about the calculation of interest followed by calculation of cash price and methods for hire purchase accounting. So, we will be starting with first introduction. So, in business one requires different types of resources varying from simple tools to big machineries, manpower, land, finance, etc. The tools and machinery and such other assets may be needed for a temporary period or for a very long period. One may have adequate finance to purchase those or may borrow finance to fulfill the need. However, some may neither have adequate finance nor may be in the position of borrowing the same. What alternatives is left to them? They can acquire the assets on rent, on credit, on installment, or can go for the hire purchase. They simply need to enter into an agreement, and that agreement is hire purchase system. Well, let us talk about hire purchase system. Hire purchase system is a method of buying goods or assets in which buyer takes the possession as soon as an initial installment of the price is paid, but the ownership obtained only after all the agreed number of subsequent installment are paid. So, kindly make a note that in hire purchase system, whenever the vendor or the buyer takes the goods and signs the contract, he cannot become the owner. He has to pay all the installments. He can have only possession, but he cannot have the ownership. However, in case of default, the vendor can take back the possession of goods. It is also relevant to state that the sum paid by the hire purchaser prior to the repossession of goods by the hire vendor are treated as hire charges for using the property, and the same are never refundable. A hire purchase agreement differs from a credit sale agreement and sale by installment because under these transactions ownership passes on signing the contract. So, in diagram you can see there are two circles, one circle represents supplier, second circle represents the customer, and intersection of both the circles portion is talking about hire purchase agreement. Under this method, the purchaser does not need to spend the entire amount in one go or borrow a large amount of money, rather can procure the right for the immediate use of an asset. It is financial facility that permits the use of asset in return of regular payments without transferring the ownership. In addition, the hirer acquires the right to buy the asset after the use of an asset for a particular period on paying a small or nominal amount of money. The acquisition of asset, especially the expensive capital asset, calls for a careful financial planning. There is no point making outright cash payment, but prudent to adopt the ways of spreading the cost over a period of time to match or coincide with that of generation of revenue by business. The hire purchase system is believed to be the most common source of finance for investment in capital assets. The assets that are suitably financed through this method are like tools, plants and machinery, cars, commercial vehicles, agricultural equipment, computers including software packages, office equipment, and etc. The system of hire purchase is governed by the Hire Purchase Act 1972. This act defines a hire purchase as an agreement under which goods are let on hire and the hirer has an option to purchase them in accordance with the terms and conditions laid in the agreement. The agreement defines very clearly and specifically the terms and conditions to be followed by the hirer and the owner. First, the owner of the goods would pass them to the person who would pay an agreed sum of amount in cash or by check as specified or agreed upon in the specified number of the periodic installments. Second, the ownership of such goods would pass to such person only after the payment of last installment by the hirer in the manner as agreed upon. And number 3, the hirer has the right to terminate the agreement at any time before the transfer of such property. Well, so far we have seen the introduction and the definition of hire purchase system. Let us talk about history of hire purchase system. The first use of hire purchase was evidenced in the 19th century for enabling the carriers to procure wagons for the use of business. Radically, it means exactly what its name suggests, a hiring of the goods until a certain condition is met, when they become the property of the hirer. This condition is usually the completion of all the payments. The advantage to the finance company is obvious. The property in the goods remains theirs until the goods are paid for. Therefore, the finance company has at least a partial security for their debt. In the 1950s and 1960s, it acquired a bad reputation. This was due to the way that some finance companies were dealing with their customers. This led to the first hire purchase acts. These acts in the main established two fundamental and far-reaching legal principles. First, 1/3 of the total amount payable have been paid. The finance company cannot recover the goods without the hirer's consent unless the finance company first obtains a court order. Second, if an innocent, that is private buyer in the good faith, purchases the good from the hirer, the finance company could not take those goods from the innocent purchaser. That is, the finance company's property in those goods is lost. To meet those conditions, the innocent buyer must be 1. Be a genuine private buyer, that is not be engaged in any way in the motor trade, and next B, he should be ignorant of the fact that a person from whom the goods was purchased by hiring them under a hire purchase agreement. These principles have remained intact up to the present day. In the early 1970s, the Hire Purchase Acts and Money Lenders Act were replaced by a new piece of legislation, the Consumer Credit Act 1974. The essential parts of the old Hire Purchase Acts remained intact. However, there was now a requirement for businesses engaged in the offering of credit to be licensed. In later years, civil procedures have been the subject of two judicial reviews, the first instigated by then Lord Chancellor, the other recent following a report by Lord Woolf. Although neither of these has led to any legislative changes, radical changes have been made to the country court system. The result of all this is that the system is now much faster, sleeker and easier to use. Under the present system, anyone running a finance company would do well to consider undertaking their own legal work. Well, after knowing the history of hire purchase system, let us talk about terms used in hire purchase system. There are many terms that are used in the hire purchase transactions and accounting, but only few are explained here. As first is hirer. Hirer is also known as hire purchaser, the one who purchases goods under hire purchase agreement. Next is hire vendor, the person who sells goods under the hire purchase agreement. Third is cash price. It is actual price of goods charged under normal cash sale or the price at which the goods may be purchased by hirer for cash. Fourth is down payment. Down payment means an initial payment payable by the hirer at the time of entering into a hire purchase agreement. Fifth is hire purchase price. Well, this is the total amount payable under the terms of hire purchase agreement in the form of down payment and installments. In other words, the total of down payment and installment is called hire purchase price. And the last is hire purchase charges. Hire purchase charges are the difference between hire purchase price and cash price, and these charges are known as interest. Since installments are spread over a longer period, the seller charges interest and it is included in the aforesaid installments. Hence, installments include payment towards cash price, financed and interest on the amount financed. Well, now after seeing the terms to be used in hire purchase system, let us talk about accounting treatment of hire purchase system. So, in accounting treatment, the total payment made in case of hire purchase is always more than the cash price because the vendor will recover the interest under hire purchase system. For this, we have got couple of journal entries under two different categories. The first is treating the goods as outright property. When the asset is recorded at full cash price under this method, the assumption is that asset has been brought with the intention of paying all the installments on the due date to acquire the asset for the business. Second treatment is the goods not becoming the property of the hirer or when the asset is recorded at the cash price actually paid. So, under this method, goods are brought under hire purchase system will not become the property of the buyer until all the installments are paid. After knowing the accounting treatment or general entries of hire purchase system, let us talk about calculation of interest. In fact, interest is one of the inevitable part in hire purchase system. Well, the price quoted by the seller in the hire purchase system or installment system is higher than the price which he would have quoted for the sale on the cash basis. The excess of hire purchase price over the cash price is treated as payment for interest. Calculation of interest depends upon the specific information given in the problem. The different situations which explain methods of calculation of interest, out of which first is when the rate of interest, cash price and installment are given separately. In such situation, the cash price, rate of interest, purchase price and number of installments etc. are all given. In that case, calculation of interest is very simple. The interest is to be calculated on the outstanding balance of the cash price at the stipulated rate. The interest for the final period should be taken as the difference between the cash price outstanding at the end of that period and the amount of installment. Next is calculation of interest when cash price is given, but rate of interest is not given. Mathematically speaking, the amount of interest should be allocated in the ratio of benefit derived, that is outstanding cash price. Since this would be too complicated, so practically the amount of interest is allocated in the ratio of outstanding hire purchase price. So, unless otherwise stated, one may assume that first is all sales have been made at the beginning of the year, or second, sales have been made uniformly throughout the year. The later assumption is considered more appropriate as compared to the former assumption. Well, since in practice the sales will be taking place on the different dates each year, not at the beginning of the year. Well, third situation where we need to calculate the interest where both cash price and the rate of interest is not given. So, the difference between any two successive installments represents the least amount of interest charged in the last year. So, after knowing the calculation of interest, let us talk about the cash price. Since the hire purchase transaction system is basically depending on two things, cash price and the interest. So, after knowing interest, let us talk about the inevitable part of cash price where the asset account should not be debited with more than the cash price of the asset. So, it becomes essential to find out the cash price first before solving such type of questions. The procedure to calculate cash price is to take up the final installment first and to deduct the interest from it. Interest can be calculated for 1 year by multiplying the sum due at the end of the year by the formula, that is interest or rate of interest upon 100 plus rate of interest. After knowing the calculation of interest and cash price, let us talk about working with the backward method to calculate the cash or cash price. Under working backward method, the cash price may be calculated by taking the necessary steps. For example, step number 1, calculate the balance due at the end after the payment of the installment. Step number 2, calculate the balance due at the end before the payment of installment, as balance due before installment is equal to balance due after the installment plus installment. Step number 3, calculate the interest included in the amount as per step number 2, as we have seen earlier, and that goes like this: interest is equal to amount as per step number 1 plus amount as per step number 2 multiplied by rate of interest upon 100 plus rate of interest. Step number 4, calculate the balance due in the beginning, as balance due in the beginning is equal to amount as per step number 2 minus amount step number 3. Step number 5, go to step number 1 until balance due in the beginning of the first year is calculated. Step number 6, calculate the cash price. As further steps, cash price is equal to balance due in the beginning of the first year plus the down payment. Well, after knowing the calculation of cash price under the backward method, let us talk about accounting method for hire purchases. Well, in accounting for hire purchases or methods of accounting for hire purchases, I have got two different broad categories. First category is for goods of considerable value and second category is for goods of small value. Under the head of goods for the considerable value, we have got two different subheads as asset full value method and second is asset accrual method. And in the heading of for goods of small value, we have got hire purchase trading account method and second is stock and debtors method. Accounting for hire purchase can be recorded under various methods of recording hire purchase transaction, as I told you in the beginning, for goods of considerable value, which has got asset value method, which is full cash price method, and second is asset accrual or actual method. And in second, goods of small value, that is hire purchase trading account and debtors and stock methods separately. First is asset value method, that is full cash price method. Well, in asset accrual method, which follows a practical approach and practically treats the hire purchase as a owner of the asset. But under this method, the asset is recorded at a full cash price based on a substance over form. Thus, this method is more appropriate since the intention of all along is to buy the asset. Well, second is actual or accrual cash price method. This method follows technical approach and does not treat the hire purchaser as owner until he makes the payment of last installment. Under this method, the asset is recorded at the cash price actually paid. After knowing the accounting method of considerable value of the assets, let us talk about second category, that is small value of the assets, under which first is hire purchase trading account or debtor system. Well, sometimes business sells goods both on cash basis and the hire purchase basis. When numerous items of the small value such as cycles, fans, radios, TV, etc. are sold on hire purchase basis, involves many transactions during an accounting year. It becomes very difficult to maintain separate accounts for each customer, calculation of interest and profit and loss. It will involve a lot of cost, efforts and time. Under such circumstances, hire purchase trading account is adopted. For keeping records of hire purchase method transactions, a separate book called hire purchase register or hire purchase sales book is maintained to record date of contract, name of the hire purchaser, cost price, hire purchase price and down payment, number of installments and amount of each installment with dates when they become due. At the end of year, profit or loss on hire purchase is calculated by extracting the information from the accounting records. First, cost of goods sold on hire purchase. Second, total cash received from hire purchase, that is down payment plus installments during the year. Third, installments due but not paid by the hire purchase customer. Fourth, installments not yet due. It is also known as stock laying with hire purchase customers. Well, after knowing this, the second subcategory of the goods of small value, that is hire purchase stock and debtor system. This is an alternative method of calculating profit or loss on hire purchase transactions. under this method, beside 3 ledger accounts, namely stock accounts, installment not due account and installment due account, hire purchase adjustment account is prepared instead of hire purchase trading account for calculation of profit or loss on hire purchase transaction. If goods have been repurchased, the goods repurchased account should also be prepared. Well friends, today we have seen what do you mean by hire purchase system, hire purchase transactions. In that we have seen the introduction part, we have seen definition part, we have seen terms to be used in hire purchase transaction, we have seen calculation of interest and cash, and later on we have seen accounting methods for hire purchase transaction. Well friends, thank you so much.